Did you know that Dave Lee recently made public an absurd forecast for the price of Tesla shares by the end of 2022? A crazy price projection might not surprise anyone, since every fan of Tesla knows that the EV company's stock is valued fairly highly. Continue watching to learn more. Investors are divided on whether to sell their shares or stick onto them in light of the recent decline in the stock price. However, some people are still bullish about Tesla, while others think the company has a lot of potential to do very well in the future. In today's video, Dave Lee makes an outrageous forecast about the price of Tesla shares by the end of 2022. Renowned YouTube content producer Dave Lee discusses investing, the idea behind it, and the benefits of doing so. His concentration is on the untaught aspects of investing and the astounding potential of assets for growth and return on investment. He describes his channel as a stream of consciousness of his current ideas about the world and investing. Lee is a well-known investor and Tesla lover, and his channel focuses entirely on investing. He just wrote a piece detailing how he raised the first funding for his Tesla stocks, which were valued at about 100 times their true value. He revealed that when he first purchased Tesla stock, he anticipated that its market valuation would increase tenfold, from $3 billion to $40 billion. Lee claims that the same mistakes individuals made with the original iPhone are being made with Tesla. He is adamant that Tesla is only beginning its journey towards innovation that embraces complexity. Nevertheless, Dave Lee made a suggestion that the price of Tesla shares would reach $1,150 before the year is over. In an earlier video, Lee stated, "Let's take a look at what the next 2 quarters might look like because investors are looking forward. They are not just going to dwell on the past numbers." Following the announcement of Tesla's second quarter financial report, he went on to display a graphic that projects statistics for the upcoming 2 quarters. According to Lee, there will be more than 1.4 million cars for the full year if that Tesla reaches their 50% year-over-year growth prediction target. They must be able to supply 385,000 automobiles in the third quarter and 455,000 cars in the fourth in order to meet that goal. Car sales in the third quarter should be roughly $20 billion, and in the fourth quarter, $24 billion if that occurs. Less than half of the regulatory credits from the second quarter, $200, were received in the third and fourth quarters. For the third and fourth quarters, the gross profit is around $6.5 billion and $7.8 billion, respectively. It is anticipated that gross margins will increase from the second quarter's 29.3% to 31.9% and 32.3%. Revenue for the third quarter is expected to be $22.7 billion, and for the fourth quarter, $26.5 billion. GAAP gross margin will be approximately 28.9% and 29.7%, respectively. Lee projects that his operating costs will come to about $2.1 billion every quarter. Although he anticipates restructuring expenditures in the third quarter, they might be far less than in the second. Operating margins should therefore be roughly 19% and 21%, respectively. You've got to basically take these numbers in quarter 4 because this is where Tesla will be at the end of the year, unless they annualize that over a 4-quarter period, investor and YouTuber Dave Lee said. You'll also notice that there is $24 billion in operating profit on operational income, which, let's say, is almost $6 billion over 4 quarters. And if you take a multiple, let's say 50, off of those figures, the valuation is almost $1.2 trillion based only on the quarterly data that have been annualized. Based on Lee's research, the end-of-the-year price of Tesla's stock is expected to be approximately $1,150. This valuation of the EV company's stock is not all that dissimilar from what other investors are willing to pay. In a previous post, Lee expressed his surprise at the 100x growth in his Tesla stock after just 8 years of owning common stock. As a result, he thinks that in another 8 years, the stock may rise even further, possibly by 100 times. It is no secret. In fact, the news about how well Tesla stock fared in 2022's first quarter and even greater performance in the second, as shown in the most recent financial report for the second quarter, is extensively discussed and circulated. Despite the fact that some investors sold their equities because they no longer had faith in the firm, Tesla continued to outperform Wall Street estimates. Do you believe that by the end of 2022, Tesla's stock will have reached $1,150? Post your ideas in the space provided for comments below. Dave Lee went on to argue that rather than giving analyst estimates for EPS or earnings per share, revenue, margin, and other measures careful thought, many people base their judgment of how their preferred company performed on their comprehension of the earnings report. Lee went on to say that the issue with this approach is that a number of analysts are not familiar with the bulk of common stock shares. He claims that some analysts even work for companies for whom they have no equity, leading to their indifference to whether the company's earnings are positive or negative. Expectations for new, high-growth companies are typically in conflict between analysts and investors, but Tesla has effectively exceeded them. For instance, Tesla's first quarter results met market expectations, but exceeded analyst estimates. According to Lee, one of the reasons for Tesla's first quarter performance was the stock's price, which was set by its revenue output constraints. This also contributed to the stock's failure and all-time high. Recall that in 2020, as the virus expanded over the world, China imposed a zero COVID policy, forcing Tesla's Giga Shanghai factory to temporarily close. Nevertheless, Tesla seems to be under control, as seen by its success in the first and second quarters of 2022. Lee stated that for Tesla to continue its optimistic ascent, revenue growth is required. He continued by saying that every quarter they should deliver more cars than investors expected, and that the revenue should likewise above their projections. It is reasonable to anticipate a rise in stock price, given Tesla's goal of increasing output by 50% by the following year. In fact, Wedbush analyst Daniel Ives predicts that in 2021, Tesla might reach a valuation of $2 trillion in just a year or two. He stated, "In a year or two from now, we're not just looking at $1 trillion for Tesla, but in a couple of years, this could be a company that could start to approach $1.5 trillion, $2 trillion market valuation." Ives is especially optimistic about Tesla's future in China, where he sees Gigafactory Shanghai as the company's main asset. Conventionally speaking, Tesla stock continues to be overpriced. Both supporters and detractors of Tesla continue to disagree on this. But a stock is more than just its market capitalization and earnings. Even though Tesla has been essentially overpriced for nearly 10 years, its price has continued to rise. With a $5.78 gain, Tesla's stock is currently trading at $891.45. The company's shares, which have been trading between $600 and $700 in recent months, have significantly improved. But it's important to remember that a variety of reasons contributed to the stock price decline, and Tesla is not the only business whose stocks went into declines. This is the result of numerous unanticipated events that have occurred worldwide. One pandemic that had a significant impact on manufacturers was COVID-19. However, a few experts have recently voiced alarm regarding the decreasing direction of Tesla's stock. It is their belief that the COVID-19 limits had an impact on the manufacturing process at the Shanghai facility, leading to a considerable decrease in the number of vehicles produced by the plant compared to their aim. But Cathie Wood, another well-known Tesla supporter, doesn't seem to care about these worries. American stock picker Wood is also the founder, CEO, and CIO of ARK Invest, a $60 billion asset firm that makes bets on cutting-edge technologies like genomics and self-driving cars. As a matter of fact, an estimated $4,600 per share is produced by ARK's upgraded open-source Tesla model in 2026. At roughly $5,200 per share, the bull and bear cases are calibrated to the 75th and 25th percentile Monte Carlo outcomes, respectively. To sum up, Wood and other prominent investors like Dave Lee continue to express their bullishness about Tesla stocks and reiterate their long-term commitment to the company. Lee continued by expressing his strong belief that Tesla will experience phenomenal growth by 2030. For more content about Tesla stocks, Don't forget to watch our other videos and hit the like and subscribe buttons.